speaking of laundering money, Beth, is the Federal Reserve. Now, pull up the article at actionforlibert.com. I just quickly typed this up yesterday. I could go on and on about this. Warren, I'd love to get your viewpoint, but the Fed actually increased its interest rates again. That's the benchmark. The federal funds rate was basically the interest rate that banks charge each other to borrow money. And so they raised that another 25 basis points, which is basically 0.25%. So the new benchmark is 5.25% to 5.5%. So they're trying to target that area. This is one of the various tools that the Federal Reserve actually has in their regard to fight inflation or to keep. So they basically have this goal to have 2 to 3% inflation annualized, right? We obviously know that's not happening. And the Federal Reserve creates the money supply. So why we have inflation? Because the Federal Reserve created so much money during COVID. And by the way, it's not just the Federal Reserve. The Federal Reserve is just a bunch of banks and a bunch of snobby, I wasn't going to say bureaucrats, like academics, right? The banks, the real muscle behind the Federal Reserve, they're the ones that always benefit, right? If you get free money and you get a 0.25%, that's a lot of new free money. It's a good gig to be in the banking industry, connect with the Federal Reserve. By the way, the Federal Reserve's got a lot of different things. They also clear checks, right? We all know that. The Federal Reserve oversees all banks that aren't just state chartered, that are actually federalized or have banks in multiple locations. Anyhow, they increased the interest rate, and this is, I think, let's see here. We were basically at zero for about a decade, and they've started to grow interest rates because this is the one tool they use to curb inflation. And we all know, and I don't know if you guys have been noticing this at the gas station, gas is up to about $3.70. Pretty much all the gas stations we're going around in the East Metro, about $3.69.
Jumped up real quick, too.
Real quick.
Yeah.
What's it at the point in Hastings?
I haven't been down there in a couple days. I'm not sure.
This is how stupid I could be sometimes. I'm like, they're so high now, I want to go to the point. And it's like, wait a second, what's the cost to go down to the point to get gas?
Do the math.
Yeah. It's 50. All right, so the Federal Reserve is playing with fire here, okay? So they're trying to stop the inflation from getting out of control by increasing the interest rate. Well, here's the problem. And they kind of have to do that, right? And the reason that works is because it's contracting the money supply. If interest rates go up, it's more costly to borrow money, so there's less money going around the economy, less savings, because people basically can't afford to take out this money. So that's the idea behind it. Here's the problem. If they keep growing interest rate, how many markets are determined or are based on or addicted to those low interest rates? And it's not small markets. We're talking about large markets like the housing market. For instance, and Warren, you could speak to this as an expert. Interest rates have gone up tremendously in mortgages. What is that? Do you know what I know you're not a loan officer, but what is the mortgage typical 30-year right now?
It's hovering around 7, but that could have been yesterday.
So do you remember when, and I bought in 2017, you found a home for me in 2017. We love it, by the way. Great neighborhood. Love it. Love our neighbors if they're watching. You know who you are watching. I think we locked in at 3.5, something like that. Somewhere.
Probably.
So it's doubled since 2017. Yes. 6 years, right?
Well, as recently as probably 21, locking in at 2.5,
Yeah, they brought it down. That's right. We were looking at refinancing. Yeah.
Yeah, and that's a problem too now. I mean, if everybody refinance and they're at 3% or better, and you're thinking about moving up, you're going to go to 7% if you have to have a mortgage. I mean, that's why there are no properties on the market.
Yeah, and I literally got friends right now that is like, we want to get out of the house because they didn't use Warren Wessel for the realtor. That's the reason. But they're in an area, same Lake Elmo, but just in an area with a little too much traffic and noise, closer to 94 side. They love to see how peaceful things are on our side of the woods. And they're like, we're just kind of locked. We're stuck. And that's what a lot of people are. They're stuck. Because to get into a new mortgage, you're talking about now you're doubling the interest rate for people that bought in the market that I did, right? Well, so generally what happens is people have to sell homes. They got to sell homes. They got work changes. They're downsizing, whatever it is in life. So they have to sell homes. So there's buyers and sellers. So the buyers, in order to afford these new homes, and the interest rates are higher, what has to happen with the price? Price has to come down, right? So this is why I have long predicted that the housing market, there's a big bubble and it'll burst again. The reason it's not happening, as you just alluded to, is because inventory is low, and there's a lot of reasons for that. But once again, I think the inflationary pressures, people just can't afford to even maybe move to another place. I guess with a lot of corporations allowing working from home, essentially they're not moving. I think this would be a theory, right? I don't know if you guys talk about this in the real estate agency, but a lot of homes now are basically the office.
Right.
So people aren't selling the homes for that reason. But there's historically low. So the only reason we don't see this happening right now is the inventory is low. It's supply and demand in the end of the day.
Right.
And there's just not a lot of supply.
Right. You know, but like you said, people are working for their houses, so that's why it's important that our government is spending over $500 million to have a dedicated bus lane in the East Metro, because we'll make it easier for the carjackers to get out to the good cars. You know, so it's well thought out.
I forgot about that, because remember when I lived in Woodbury, we used to be in the same BPOU, and you know they were talking about the rapid bus lane. And I'm like,
it's
nowadays
being built.
It's like, that's not a thing these days as much. Although there's still too much damn traffic. I remember that was the best part about the pandemic, is not much traffic.
Oh, yeah,
I hate traffic.
awesome.
I hate traffic so much. I even come to Roseville. I wish we built this thing way over in the East Metro. I do not like coming. Sorry, Bridget. I know that would suck for you, but I just don't like. I hate traffic. Oh, stop it.
I'm moving slightly closer to the cities. I think I'm only 20 minutes away from the office now.
Yeah, you got a good
Where
spot.
in the
He's
fall.
actually going to be in Lake Elmo.
Oh, nice.
I was looking to buy a home. Funny that you're a realtor, but yeah, I couldn't.
Did you have a realtor?
Yeah, I did. Actually, you work with them.
Oh,
okay.
Oh,
And
fair
we
enough.
were
Okay,
looking
I see.
around at houses. We found a couple that we like, but the reality is, it's just we just can't afford them.
yeah, that's true. So the housing market, eventually, the people will end up selling, and there'll be more supply, and that's where you're going to see it. Prices will have to come down. So right now, if you're selling, you have a wonderful market, but that's going to correct itself as interest rates go up. Here's another one: the banks that are addicted to low interest rates, big portfolios of bonds. Go back to the article. There's a graphic here of the amount of banks that failed in the Great Recession, and then the ones today. Now the numbers, there's only two notable ones of 2023.
Right.
But in orange, you can see the amount of assets there. And of course, we're talking about Silicon Valley Bank, and I can't remember what the other one's name was. Escaping my mind right now. But look at the amount of assets, and that rivals basically 2008.
Yeah.
Wow.
As we increase interest rates, you have bank failures, because banks have large portfolios of fixed income securities that are tied to low interest rates. And so just like the housing market, when you increase interest rates, no one wants to, if you were to sell a bond of a year before, that bond's price goes down to sell it, because why would you want to buy a bond with a lower interest rate when you could buy new bonds with higher interest rates, right? But so they call that selling at a discount. So essentially, you have to sell at a discount so that people still get the same rate of return. Don't want to get into the mechanics of the bond market. I hope that makes a little bit of sense to you, but that's what's going to happen in the bond market. And by the way, you being a product of the 80s, you know this very well. The bond market's been on a 30-year plus bond run. Like basically, interest rates came precipitously down. In 81, we had mortgages in the teens.
Oh, yeah. High teens even.
High teens, exactly. The short-term treasuries were at like 17%. So, yeah, essentially, and that was also to curb the inflation during, there's another great case point. Curbed inflation in the 70s, late 70s from Jimmy Carter's time. So that's another one. Here's the big kahuna, and this is why I'm not optimistic on the global economy, and certainly not optimistic on the U.S. economy. All the debt that we've taken on, because this is the solution. COVID, the Great Recession, even going back to dot-com bust. The big solution by government and the Federal Reserve to save us is to take out more debt and to print money to do it. So essentially, we are now seeing government debt that was financed at low interest rates. It matures, and we don't pay the debt off. Do you guys know that? We don't actually have a big bank account we're paying it off with. We just re-borrow to pay off the old debt. So guess what? When we get this new debt, it matures, or we just take a higher, or we have higher deficits. That's now debt at a higher interest rate. So if you look at the U.S. Treasuries, and I was telling you about this, one of the best bets out there right now is the short-term U.S. Treasury.
Yes.
You can get 5% yield on a 2-month Treasury. Why the hell wouldn't you do that? It's high. It's higher than a 30-year bond.
Yep.
And you know you're getting your money back. It'll be devalued, but you know you're getting your money back because the government actually backs that money because they can just print it. That's why they back it, by the way. This whole jig's going to be up. It's sad. I don't know why I'm laughing. The jig's up, right? This is actually the most damn important. If I could conclude and bring this whole episode to one summary, we're off worrying about damn aliens, which you guys think's diversion. Maybe it's true. Maybe it's them to consolidate global world order. We're worried about that. We probably all heard the Fed grew interest rates. Did you know what that meant? You probably didn't know what that meant. I'm telling you what, no one's talking about this massive problem that we have right now. Going up in interest rates, which they pretty much have to do because inflation's out of control, is going to cause a global economic depression because that's what's going to happen. We cannot afford to continue paying off our debt or servicing our debt when those interest payments go up. This is a massive problem. And guess what? What's the government going to do when interest rates become so unbearable? Are they going to cut defense spending? No, you can't cut defense spending. We got to keep fighting Russia and Ukraine. And what about China? We gotta stave off China. They're not shrinking the defense budget. Medicare, Medicaid, Social Security, those programs continue to rise. Are they going to cut the national parks? No, they're not cutting the national parks. They're not cutting a dime of your government. So when interest rates keep going up and the servicing of the debt goes up, what are they going to do? They got two options. You guys know them? They either tax you more, right? We become Western Europe, France. You pay 50, 60% share. How's that going to go over? We'll be in the streets, no doubt. Look what they're doing right now in France. They're in the streets because they want to make any cuts. People are not going to live with that in America, so they can't tax it. So what are they going to do? They got one other option. They do the same thing they've been doing, and they continue printing more money. And what happens to the value of the dollar? It just completely gets diminished. This is what's coming. But I digress. Let's go back to aliens here.
Let's not.